Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Thursday, June 20th, 2013. We had a pretty rough day in the market after the Federal Reserve came out with their rate decision and their commentary. We lost 21 handles out of the SPOOs and 32 out of NASDAQ, and also did some pretty decent internal damage with more than 2,000 net losers on the New York Stock Exchange and more than 1,000 losers net on the NASDAQ side. So let's move on and take a look at the major charts and see what the current technicals are. All right, so here's a look at the ES futures. You can see that we started out the day okay, and we're trying some higher prices here to see if we can improve on the previous day's settlement, but it wasn't to be. After the release came out, we did take out the previous day's low and ultimately settled down in that 1625 area, which has been so prevalent. That's the 4-ace level on this chart. So if we continue lower tomorrow, the next level that's going to come into play is going to be the 50 DMA, 1614.5 there. If that gives way, this previous low right here in the area of the 3-ace level is going to be the next key area. To the upside, obviously the high of today's range is going to be important, and that above that 1656.25. Moving on to the NASDAQ side, NASDAQ has approximately the same design, but it's got a little bit more room before it gets to the 50 DMA. So the 50 DMA is going to be coincident with the 7-ace line, which is going to be support if we continue to the downside. Now to the upside, the thing that we were flirting with was the 13 exhaustion warning here on the seeker. What we need to do is close above this candle here, candle number 8. We need to close better than that close, which was 3001. We've been up in that area, but have so far been repelled by it. This very well could be a retest and a failure here of this previous high. So here's your A wave down, the B wave retest. A lot of people would prefer to see a little bit of a better push up in the B wave, but it doesn't necessarily have to happen for the pattern to play out and to start a C wave that'll gain some momentum to the downside. But if we do get above that 3001 on a closing basis, we will have our seeker exhaustion, and then we'll really start to dig in on the short side. All right, internally, the important feature was the net advanced declines that were so very negative in this session. We did take a hit here to the advanced decline line. The New York side did not make a new low on this move, but prices are still above their previous low. So keep an eye on this. This is actually pretty close to the low and closer to the low of the move than prices are. This tends to lead, so keep an eye on this. The NASDAQ side is still kind of contained within this little mini trading range, so a resolution one way or another has to be respected. All right. Interestingly, the put-call ratio was fairly flat today. Didn't really pick up either way. So no nod from the put-call ratio either way today. All right, now we had a pretty hefty spike today in the New York Stock Exchange ARMS Index, or the trend. We closed at 2.41, which is a pretty big number. But as you can see, it didn't really even break the recent range here on the 10-day moving average of that. So we've got quite a bit of room here before we get to that 1.35 oversold threshold. So there's plenty of room for the bears to get in gear if they want to take things down before we get this classic oversold indicator. All right, for our S&P TLT cross, this is the ratio of those two. Triple top is still in effect, even though the equities were fairly weak today. The bonds were weak as well. So this didn't really move all that much and didn't really pick up that much in favor of the TLT. So we'll have to see how they want to handle this tomorrow. Okay. Now what's happening internally with the cumulative advanced decline line is so important. I just want to circle back and highlight it again and take a look at it from a little different perspective. This is the New York Stock Exchange cumulative advanced decline. That's the blue line, and the S&P here is represented in red. And you can see how we started to roll over here ahead of the S&P really getting weak. This was starting to roll over. The S&P was still pushing higher and attracting money. We're really starting to see some more weakness develop here in the cumulative advanced decline line. And the one thing to keep in mind is that the cumulative advanced decline line tends to lead, and when it does, you do not want to argue with it and take the other side of that fight. So for now, we got to respect what the weak market internals are telling us, and be prepared to get very active on the short side of the market, and definitely treat anything that's on the long side of our ledger as rentals only. All right, so today was a tough session. The all the averages got hit today. All the different sectors got hit, and all the asset classes except for the dollar got hit. Bonds were lower, stocks were lower, commodities were mostly lower. The gold stocks were down. Gold was weaker. And the only thing that really appreciated today was the dollar. So if you held cash, that was the only thing that worked in your favor today. Note that the XAU here is now retesting this double bottom, which is always precarious because triple tops and triple bottoms are few and far between. All right, so here's a look. Here's a look at the sectors ranked from best to worst, and you can see there's nothing green here. It goes from not good to uh-oh. At the top of the list was the banking index and the brokers, which is actually a little bit interesting. And I think that was more a function of the dollar than anything else today. And oil services were fairly strong. Housing sector, which has been weak so for the last few days, bottom of the list again. XAU, there was no safety there. That was very weak as well. The utility index was also weak with bonds getting hit, rates are rising, so it puts pressure on utilities and all the dividend yielding things because it makes them a little bit less attractive if you can take a safer alternative in bonds. So definitely weak day across the board here. There was really just nowhere to hide unless you had cash. Here's a look at the housing sector, which was the weakest sector on the day. And the takeaway here is that this is below the 10 EMA, the 50 DMA, and now potentially approaching the 200 DMA. So this is definitely a weak sector. It's got quite a bit of distance between the old high, so that's definitely something to take note of. Here's a look at the XAU. The XAU trying for this triple bottom here. The key feature is now we just printed today 13 bars down in the seeker, going for this triple bottom here. So this is definitely something to take note of. Just keep in mind here that the 1 through 13 is really just lateral. We talked about this last evening. So this is really just based on time and not price so much because we don't have any real extension to the downside. Here's your 1 candle right here. Here's your 13. I mean, it's only 5, 6, 7% lower than where the whole secret count started. So this really is based on time and not price. So got to see if they can circle the wagons here and pivot this to the upside. If it does, I'm definitely interested, and this should be a very, very easy way to make some money here. Looking for continuations. All right, so looking at the BKX. BKX was essentially just range bound here for the last few days. We did take out the high and the low of the previous day, which is never good, but we are still contained within the previous range. Resistance to the upside is the top of this boundary here at about 62, and support's going to be about 59.5 at the lower end of that trading range. Broker dealers were hanging in there fairly well, but the key feature here is we put in an outside day down at range high. Didn't cover a lot of range, but it is an outside day down, and we're 12 days up in the seeker count now. Let's take a look at oil and gold. First, here's oil. Oil did try to push up above this level, but as we were anticipating, we're going to have a lot of trouble here, really getting away from this this 7/8 level because we just printed 9 bars up. So right now we've got a range high doji. And here are the gold futures, and gold really just essentially looks like the XAU. Triple bottom. The bar count's a little bit off, but potential triple bottom in place if they can pivot this and make good on this. All right, folks. Tomorrow is going to be Thursday. That's going to be the day leading into quadruple expiration, so we're probably going to see some good volume tomorrow. I know the volume was a little late, a little flaky today, as we expected. We were looking for that barbell volume where we had some in the beginning of the day and then at the end, but not much in between. Tomorrow, I think we're after about the first 60 minutes of play. Look for a direction, and whatever direction you get, respect that because that's probably going to be the quarterly option on unwind. So you don't want to be on the wrong side of that. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.